This is the moment we've been waiting for. This is the moment the history books will point to when they write the obituary of the fiat currency system. I need you to look at your screens right now. I need you to take a screenshot because you're watching the end of a 50-year-old lie. It is Friday, January 23rd, 2026, and the psychological dam that held back silver's true price for decades has finally exploded. The barrier is gone. 999 is broken. We just watched the Globex ticker, the electronic heartbeat of the Western financial system, blast through the ceiling. The banks have defended like their lives depended on it. The price printed a high of $99.60. For the last few weeks, they threw everything they had at this level. They threw paper contracts. They threw margin calls. They threw media hit pieces. They tried to build a wall at 95s. It failed. They tried to build a fortress at 980. It failed. And today, the market stepped right over them like they weren't even there. The short sellers, the banksters, who've bullied this market since the 1980s, are staring at their screens in pure terror because at $99, their problem isn't theoretical anymore. It isn't a paper loss. It's mathematical insolvency. It's the point of no return, where margin debt outruns the total capital of the firm. They can feel it because their whole world is flashing before their eyes. But if you think $990 is impressive, you're staring at the wrong chart. You're watching the caboose, not the engine. The engine is in Shanghai. While New York is cautiously tapping at triple digits, China already kicked the door off its hinges and ran straight through. We have the closing data from the Shanghai Gold Exchange, and it is staggering. Silver in Shanghai closed up 8.5% in a single session. The price is 11.66. In local terms, that's 24,097 W per kilogram. They're paying a premium of nearly $13 over the Western spot price. Do you understand what that does to the global market? It's a tractor beam. It drags the West kicking and screaming into triple digits. Every arbitrage algorithm on Earth is screaming the same command. Buy New York at 99, sell Shanghai at 111. That's a near instant 12% profit, and there isn't enough liquidity in the world to smother that trade. The banksters in New York can print all the paper contracts they want, but they can't stop physical metal from flowing toward the higher price. They're trying to fight gravity. They're trying to pin the price down while the rest of the world is lifting it up. And today their arms finally gave out. So why is this happening today? Why did the dam break on a random Friday in January? Because the market finally accepted that the bank's insolvency risk is real. The smart money knows that JP Morgan and the others are trapped. They know that for every dollar the price rises, the banks bleed billions. And when a predator smells blood, it strikes. Hedge funds, family offices, sovereign wealth funds, they're joining the party. They're piling on. They're squeezing the shorts. This is no longer just inflation or supply and demand. This is a kill shot. The market is trying to bankrupt the manipulators, and based on this price action, it's working. But there's something else happening today that is even more terrifying than silver's price. There's a warning light flashing on the dashboard that we haven't seen in 50 years. Usually when silver goes vertical, when the fear trade detonates, the stock market crashes. Usually investors sell stocks to buy gold and silver. It's a rotation from risk to safety. But today the S&P 500 is rising. Today, the NASDAQ is green. Today, gold is at a new all-time high of 435, and the stock market is celebrating right alongside it. That's impossible. It breaks every rule of standard economics. Risk and safety aren't supposed to rise together unless the rise isn't real, unless the dollar is collapsing so fast that it makes everything look like it's going up. We are watching the most dangerous economic phenomenon known to man. We are watching the beginning of the hyperinflationary melt-up. We need to talk about this impossible signal. We need to explain why a rising stock market is actually a sign of apocalypse. Let's go to part 2. Let's look at the crack-up boom. This is the part of the broadcast where you need to stop thinking like a trader and start thinking like a survivor. Because what's on the screen right now isn't a market rally, it's a siren. If you look at the dashboard of the global economy, you'll see a flashing red light that hasn't lit up since the 1970s. If even then, it is the impossible signal. Historically, the financial world runs like a seesaw. On one side, you have risk assets, stocks, tech companies, the S&P 500. These are what people buy when the economy is booming and they feel brave. On the other side, you have safe havens, gold, silver, bonds. These are what people buy when they're terrified, when the economy is breaking, when they're trying to protect what they have. When one side goes up, the other side goes down. That's the rule. That's how the machine was built. But today, the machine is broken. Today, The seesaw has snapped clean in half. We're watching gold hit a new all-time high of 4,035. We're watching silver smash through $90. And at the exact same time, we're watching the S&P 500 climb into record highs. We're watching the Dow Jones rip upward. Do you understand how terrifying that is? If stocks are rising, that says people are optimistic about the economy, right? But if gold is racing toward $5,000, that says people are terrified of the economy. They can't both be right unless neither of them is actually rising. Unless the assets are standing still and the ground beneath them is sinking. That is what a hyperinflationary melt-up looks like. We are entering what the Austrian economist Ludwig von Mises called the crack-up boom. It's the moment the public realizes the currency itself, the dollar, the euro, the yen, is dying. And when currency dies, it behaves like a falling elevator. Inside the elevator, it feels like the floor numbers are going up. Floor 10, floor 20, floor 100. But you aren't rising. The building is collapsing around you. Stocks go up not because companies are selling more widgets, but because the dollars used to buy those stocks are worth less every hour. Gold goes up because it's the one constant in a world of variables. This is the real emergency. If this were a normal market, silver spiking to $99 would trigger panic in stocks. Margin calls would force hedge funds to dump Apple and Amazon to cover their silver shorts. But that isn't happening. Why? Because there is so much cash, so much newly printed, increasingly worthless fiat sloshing through the system that it's lifting everything at once. It's a liquidity tsunami. The Federal Reserve has lost control of the bond market. The government is printing trillions just to pay interest on the debt. And that money has to go somewhere. It's flowing into stocks, it's flowing into gold, it's flowing into silver, it's fleeing the bank account. The market is collectively screaming, "I don't care what I buy, just get me out of cash." This everything rally is the hallmark of a currency entering its terminal phase. We saw it in Weimar, Germany in the 1920s. The stock market went to the moon in mark terms while people starved in the streets. We saw it in Zimbabwe. Their stock market looked like the best performer on earth right before the currency went to zero. And now we're seeing it in New York. The rise in stocks is an illusion. It's a mirage. You are not getting richer if your portfolio rises 10% while bread and gas rise 20%. You're losing purchasing power while feeling wealthy. That's the trap. That's the seduction of the crack-up boom. It makes you feel brilliant right up until the moment you try to buy a loaf of bread. So don't look at green numbers on the ticker and assume the economy is strong. The economy is dead. The patient is flatlining. The green numbers are just the result of doctors pumping infinite adrenaline into the corpse. And the ultimate proof, your smoking gun, that this is a liquidity event, not a growth event, is the sheer volume of money created in the last 12 months. We need to look at the money printer. We need to look at the global supply of currency because that is the fuel for this fire. Why is everything rallying? Because the world is drowning in paper. Let's go to part 3. Let's look at the global edition of the printing press. So we've established the crime scene. We have the impossible signal, stocks and gold rising together. We have silver smashing $90 while the S&P 500 hits record highs. But every crime needs a weapon. And in this case, the weapon is sitting in the basement of every central bank on the planet. The weapon is the printing press. If you want to know why asset prices are exploding, houses, stocks, gold, silver, even used cars, moving up at the same time, it's not because they suddenly became more valuable. A house is still wood and bricks. A stock is still a slice of a company. They aren't changing. What's changing is the measuring stick. The ruler you're using, the currency is shrinking. And it's shrinking because central banks are flooding the world with an ocean of new unbacked paper. We are watching the global version of money printer go brar. But this time, it isn't funny. It's terrifying. Look at the data coming out of China. While everyone focuses on silver buying, hardly anyone talks about how it's being paid for. China's M2 money supply, the total cash and checking deposits in the system, just hit an all-time high. They're pumping trillions of yuan into the economy to slow the real estate collapse. They're trying to float a sinking ship by pumping more water into the hull. And where does that money go? It flows into commodities. It flows into silver. Now look at the United States. The Federal Reserve says it's fighting inflation. That's a lie. Look at the balance sheet. Look at government spending. The U.S. expanded its money supply by trillions over the last 24 months alone. They're running a $2 trillion annual deficit in peacetime. That money doesn't exist. They have to print it to spend it. And when you print $2 trillion and dump it into the economy, you dilute every dollar already in your pocket. You're being robbed. Every time the stock market jumps because of stimulus, it's the government picking your pocket through inflation and handing it to Wall Street. But the most terrifying examples are the ones that show you the future. Look at Argentina, look at Turkey. In those countries, the money supply expanded by 70% in less than a year. And what happened to their stock markets? They went up. Turkey Key's market became one of the world's best performers in nominal terms. But did regular people get rich? No, they got wiped out because while stocks rose 50%, food rose 100%. That's the trap. And that is exactly what is happening in the West right now. We are at the start of the Turkeyification of the U.S. economy. There is so much liquidity, so much raw, unbacked cash flooding the system that it's lifting every boat in the harbor. Leaky boats, broken boats, yachts, everything rises, but the water they're floating on is toxic. This liquidity flood creates a distortion field. It makes you think you're a genius. You see your retirement account at new highs and think, I'm doing great. You're not doing great. You're standing on a treadmill that keeps speeding up. You have to run faster just to stay in the same place. The rise in silver to $99 is the only honest signal on the board. Silver isn't climbing because of hype. Silver is climbing because it now takes 99 diluted debased dollars to buy the same ounce of metal that used to cost 20. Silver is the thermometer telling you the patient has 105 degrees fever. The stock market is the doctor insisting the fever is bullish. So don't confuse liquidity with wealth. It's the opposite of wealth. It's debt. It's devaluation. And as this flood of cash searches for a home, it's creating strange anomalies. It's snapping correlations that held for decades. It's creating a market where new tech behaves differently from old money. We need to talk about the elephant in the room that is strangely quiet today. We need to talk about Bitcoin. Why in the middle of this inflationary meltup is digital gold lagging behind physical gold? Why is the market choosing atoms over bits? We are entering uncharted territory. Let's go to part 4. Let's look at the new floor and the strange behavior of crypto. We are officially in uncharted territory. The map we've used for the last 15 years, the map that says tech is king and digital is the future, just got thrown out the window. Because in the middle of this historic liquidity-fueled meltup, one asset is unusually quiet, one dog isn't barking, and we need to talk about Bitcoin. For a decade, the story has been simple. Bitcoin is digital gold. It's the fastest horse. If the dollar collapses, Bitcoin goes to the moon. But look at the scoreboard today. Gold is at an all-time high of $4.35. Silver is smashing 99. Stocks are vertical, but Bitcoin is lagging. It's stumbling. It's acting like people forgot it exists. Why? Why? In the biggest inflation event of our lifetimes is the hardest money ever created, losing ground to a shiny rock. The answer tells you everything about this crisis. This is not a speculative mania. This is a physical panic. When the chips are down, when supply chains fracture and currencies burn, the market retreats to the most primal form of value. It retreats to atoms, not bits. Investors are realizing you can't build a solar panel with Bitcoin. You can't put Bitcoin in a cruise missile. You can't use Bitcoin to conduct electricity in an EV battery. Bitcoin is digital energy, sure, but silver is physical necessity. And right now, the world is short on necessities. The smart money is making a calculated move. They're rotating out of risk on digital assets and piling into risk-off physical assets. They're choosing the thing with 5,000 years of history over the thing with 15. This crypto lag is the ultimate proof we are not in a tech bubble. We are in a commodity supercycle. Capital is flowing from the cloud back to the earth, from the intangible to the tangible. And that brings us back to the most dangerous number on the board. While the digital world sleeps, the physical world is setting a price target the paper market cannot ignore. We've talked about the $99 break in New York, but we haven't talked enough about the magnet pulling it upward. We need to talk about the real floor. We need to talk about Shanghai trading $12 higher than New York because that gap, that massive, undeniable spread is the fuse that's going to blow the conchs apart. The US paper price has no choice. It's living on borrowed time. Let's go to part 5. Let's look at the Shanghai target. While crypto is confused and the stock market is hallucinating, one signal is crystal clear. It's coming from the east, and it's exactly why celebrating 99 eyes is premature. You're focused on the milestone of 99, but the market is already staring at the destination of 111. We need to talk about the real floor. We need to talk about the massive, undeniable dislocation between New York and Shanghai. Because right now, we are staring at an arbitrage opportunity so large, it practically guarantees the destruction of the COMEX short sellers. Let's do the math. In New York on Globex, you can theoretically buy a contract at 996x, but in Shanghai, that same ounce of silver, the exact same chemical element is trading at $166. That's a $12 RS $50 difference per ounce. Do you understand what that means? It means the Western price is wrong. It means the US dollar price is a lie. In a functioning global market, a spread like that lasts milliseconds. High-frequency traders buy the low and sell the high until the prices converge. But this spread has lasted for days, and it's widening. That tells you the pipe between West and East is clogged. It tells you physical metal can't move fast enough to satisfy Chinese demand. But more importantly, it acts like an industrial strength vacuum. Every ounce mined in Mexico, refined in Switzerland, or vaulted in London is looking at those two prices. Where do you send your metal? New York for $90 or Shanghai for $111? The answer is obvious. Metal flows to the highest bidder. Metal flows east, and that leaves New York starved of inventory. That's why the short sellers are doomed. They're trying to cover shorts in a market being drained dry by a competitor willing to pay 12% more. The US paper price has no choice. It's living on borrowed time. It cannot sit at $90 while the real world pays $111. It has to gap up. We are approaching a morning where you wake up, check your phone, and realize silver didn't trade. At 100 or 101, you'll see it opened at $110. It will skip the numbers in between. It will teleport to meet Shanghai because sellers will refuse to sell for less. That is the definition of a seller's strike. Why would anyone sell silver in America today? It's financial suicide. If you hold silver, you're holding the only ticket out of the burning theater. Shanghai is the exit sign. The US price is just smoke filling the room. The banksters know this. They know the arbitrage is killing them. They know they're fighting a war on two fronts: the insolvency on their balance sheets and the physical drain to China. They're out of ammo. The $99 break was their final defeat. Now they're praying for a miracle that isn't coming. So here's the final conclusion. We've seen the impossible signal. Stocks rising with gold. We've seen the global money printer chewing up the currency. We've seen the Shanghai vacuum setting the real price at $111. The picture is complete. The verdict is undeniable. This is not a drill. This is not a standard bull market. This is a regime change. We need to tell you exactly what to do with your cash before it burns a hole in your pocket. Let's go to part 6. Let's deliver the verdict. So here's the verdict. We've laid out the evidence. We've shown you the impossible signal of the stock market rising in lockstep with gold. We've shown you the Shanghai vacuum sucking physical metal out of the West at $111. And we've shown you the banksters losing their final line of defense as silver smashed through 99 eyes on the global exchange. The diagnosis is terrifyingly simple. The patient isn't getting stronger, the patient is dying. And the doctors, the central bankers, have decided to pump the patient with so much adrenaline that the heart is going to explode. You need to understand what we're seeing today is not a bull market. A bull market is when an asset gains value because the economy is growing and people are prospering. This is a currency collapse. This is a crack-up boom. Silver isn't going to $100 because industrial demand is up, though it is. Silver is going to $100 because the dollar is going to zero. The measuring stick is melting in your hand. The banksters didn't lose control of silver. They lost control of the dollar. They had to choose between crashing the stock market or destroying the currency. And today, watching the S&P 500 rising alongside gold, we know exactly what they chose. They chose the printer. They chose to sacrifice your purchasing power to save their banking system. So $100 is no longer the ceiling, it's the floor. It's the rear view mirror. Don't anchor your mind to these numbers. Don't tell yourself, I'll sell at 100. If you sell at 100 for cash, you're trading a scarce asset for a dying liability. You're jumping off the lifeboat and swimming back to the sinking Titanic because it looks big. Big doesn't matter. It's going down. The window to exchange paper for metal is closing. Not because shops are shutting, but because price is moving faster than your bank transfer can clear. While you wait 3 days for funds to settle, silver moves $10. While you argue about premium, Shanghai moves to 120. You are racing a printing press that can print trillions in a second. You can't win that race with cash. You can only win by holding assets that cannot be printed. We are watching the end of the fiat experiment. This volatility is the death rattle of the old system. The rising stock market is the trap. Rising gold and silver are the escape hatch. Don't get hypnotized by the noise. Don't let green candles lull you into a false sense of safety. The water is rising. The dam has broken. Get out of cash. Get out of debt. Get into the lifeboat. This is chill, guy. The barrier is broken. The printer is on. Pulled hard.